Let's take a look now at what's going on in the Nigerian market space. As I said, emerging markets have been under pressure, and it will be interesting to see if that pressure has been extended to the Nigerian market. Indeed, that market hugely under pressure today, 7% down at the moment, 36,189.77. We shall be exploring some of the reasons for that rout that we've seen, as I said, across all emerging markets. Let's take a look at the currency front, and the Naira on the day up, in fact, down against the dollar 0.4%, 160.70. We're saying we are beginning to see some of the emerging market central banks coming into the market. We saw the Indonesian central bank particularly increasing interest rates, and at the same time upping its deposit rates for banks that park their money overnight with the central bank to try and stabilize the Indonesia rupee. To get a more in-depth view of how that market is trading today, I'm now joined by Abiola Razak, lead researcher, UBA Capital. Abiola, thanks for your time. As I said in my intro, what we potentially...
Godfrey.
Potentially what we're looking here
Sorry?
is... yeah, I'm coming. Can you hear me?
Yes, I can hear you now. Good.
Okay, fantastic. Now, as I said in my intro to you, we are really looking at a rout across emerging markets across the world. And in addition to that, of course, this rout that we're seeing, the selling that we're seeing, is also affecting developed markets. Are we part of the global story here, or are there Nigeria-specific issues that the market is seeing in that 7% drop now?
I think it's a double whammy, I must say. One is the international liquidity concerns, which of course has been the major driver of Nigerian equity market over the last 3 to 4 weeks. If you remember very well, we've actually made a call this week to sell down on equity, largely because we have a concern for that liquidity that's actually the major driver of Nigerian equities market. And what I mean by that is the fact that there is concern, like you mentioned earlier now, with respect to possibility of a slowdown in the stimulus programs of most monetary authorities, be it in US or you talk of the Asian countries and even in Europe. And of course, that's going to slow down portfolio inflows into Nigerian markets as well as other frontiers markets. And of course, globally, most other markets too are also down in line with that liquidity concern. But the second thing, which is the reason why I call it a double whammy, is the currency risk in Nigeria now. Yes, Naira has been stable over the last 18 to 20 months. But the interesting thing is the fact that we need to watch closely what the Naira outlook is over the next couple of months. Yeah. If you remember very well, over the last 3-4 days, Naira has been under significant pressure, largely because of the increase in corporate demand for FX, basically for imports. And of course, we also have to recognize a part of that demand for FX is also the speculative part of it, which is always difficult to isolate. But of course, the major highlight is the fact that Naira pressure, a pressured Naira, is definitely negative for equities markets, particularly with respect to portfolio inflows, which has been the major drag on the fixed income market, for instance, over the last 3 to 4 trading sessions. Yeah. We're beginning to see that filter into the equities market.
Yeah, Abiola,
and
now,
that's why I call it a double whammy. So yes, liquidity concerns and of course Naira concerns.
Yeah, absolutely. But a 7% drop, surely that sounds like a large drop, because some of the drops that we've been seeing in other parts of the world have not been as severe as that, though we did see Japan down 6% today. When you look at that market, therefore, would I be right in suggesting that there must be some value that's beginning to sprout out in different parts of the market?
I think another important thing we need to note with respect to the momentum in the loss in the Nigerian equities market is the fact that this is a market that was already fairly valued even before the liquidity concern and the Naira currency risk. If you remember very well, I did mention this last week on this program, that our view on the equities this week is actually to sell down, largely because at 14.5 times price to earnings multiple, and of course a dividend of around 2.8%, we think the Nigerian market is fairly valued, and we think they are just little upside over the course of the year. Yes, the Nigerian consumer story remains very intact. The monetary environment looks very good, except for the recent pressure that we're beginning to see on the Naira, which in our own view, we think is something within the control of the CBN. Yeah. But of course, we also need to look at it from valuation perspective. Yeah. So even before the issue of the double whammy of the currency and of course liquidity concerns, the market is already due for a correction. So it's more of like a ripple effect. And that's why we're seeing this level of momentum. Yeah.
Abiola, find me something to smile about. As I was saying in the South African segment of the program this morning, I really want to talk about where the value lies, because as Warren Buffett says, when the market is under pressure and everybody is selling, that's when you see real opportunity. Where is the value? Show me some stocks that are now reflecting value.
That's quite interesting, and I think it's just in line with our expectation that there's still some value in the financial services space. Remember very well, over the course of the year, we've seen more and more interest of foreign investors in particular in the consumer goods and, of course, the industrial goods space. And that's largely because of the rich Nigerian consumer story, which, like I said, still remains very much intact. Yes, we've got a very good demographics in Nigeria here. We've got a very, very good income growth levels. And, of course, there's still that supply gap in Nigeria as against what you find, which is demand gap in other countries. Here in Nigeria, it's more of a supply gap. So definitely the consumer goods companies are good companies to actually invest in. But in terms of valuation, they're already overvalued. And that's why we see more value in the financial services space. The major reason why most investors have not been bullish on the space over the last 6 to 8 months in particular is just because of the headwinds that we expect in terms of the earnings for the banks. And that's largely because of the reforms that we're beginning to see from the CBN in terms of the likely reduction in their non-interest income, particularly the reduction in COT, which by 2015 will actually be nil. Banks typically earn about 7% of their income from the segment. And of course, we are talking about 7% of Nigerian banks, the earnings of Nigerian banks going under the carpet. And that's why most investors are bearish. And of course, again, there was some level of retraction in bond yields as well as yields on treasury bills, which was a major earnings source for banks in 2012. So on the back of all this drag, and of course, AMCON levied has increased to 0.3%. That's why most investors have been a little cautious on trading on banking stocks. But currently now, we believe that there is still value in the space, largely because of the fact that, yes, all these headwinds are there to their earnings, but importantly is the fact that the loan growth are actually going to be quite attractive, particularly in the second half of the year. We are not so bullish in the first quarter of the year, and likewise the second quarter. But in the third and the fourth quarter of the year, we'll see significant growth on the back of power assets that are actually going to generate significant loans for the banks. Remember very well, the government has set August 21 deadline for the completion of the power asset sales, particularly the generation companies. And of course, this portends significant opportunities for banks to grow their loan book. So these are going to be major drivers for the banking industry going forward.
Abiola, before I let you go, I must ask you about Dangote Cement, the biggest stock, of course, listed on the Nigerian Stock Exchange. That's up 55% year to date. Is there still any value in there?
For us, we think Dangote is currently overvalued. Our valuation is around 170 naira. We would expect market to correct towards that level. Yes, Dangote Cement is a very good company, and of course, the fundamentals are quite rich, especially when you look at it from the perspective of the rich margins of that company. For instance, Dangote has got about 50% operating margins, which is the highest that you can find in any cement company in the African continent. Not only that, the volumes of Dangote Cement present significant opportunities for investors to be able to grow their wealth over the near term. But of course, from valuation perspective at this point in time, particularly when you're looking at a year-end target horizon, we maintain a 170 naira target price for Dangote Cement.
Absolutely.
And that's why we actually expect market to retrace towards that level.